IonQ just achieved 99.99% quantum computing accuracy, a full year ahead of competitors. IBM secured over $1 billion in quantum revenue. And NVIDIA's quantum bridge technology is changing everything. These aren't hype cycles anymore. This is quantum computing's commercial inflection point in 2026. If you've been watching quantum computing stocks, you know 2025 was the setup year, but 2026. This is when commercial revenue starts flowing. I've spent the last 2 weeks analyzing earnings reports, analyst upgrades, and technical breakthroughs to find the 3 quantum computing stocks with the strongest position heading into this year. These aren't speculative bets, these are companies with real revenue, proven technology, and massive growth catalysts lined up. By the end of this video, you'll understand exactly why these 3 quantum computing stocks could deliver exceptional returns in 2026. Let us dive in. Stock number 1. IonQ, the pure-play leader company overview. IonQ is the most advanced pure-play quantum computing company in the market today. Trading around $45 as of early January 2026, with a market cap approaching $9 billion, IonQ uses trapped ion technology that delivers superior qubit stability compared to competitors. The company provides quantum computing access through major cloud platforms including Oz, Microsoft Azure, and Google Cloud. Why now? The timing for IonQ couldn't be better. In October 2025, IonQ achieved a historic milestone, 99.99% 2-qubit gate fidelity. No other company has crossed the 99.9% threshold yet. This gives IonQ approximately a 1-year technical lead over well-funded competitors like Microsoft and Alphabet. That accuracy matters because error correction is the single biggest barrier preventing quantum computers from widespread commercial use. Financial metrics: here's where the growth story gets compelling. IonQ generated $39.9 million in revenue during Q3 2025, and full year 2025 revenue is projected at $110 million. But look at 2026. Analysts expect revenue to surge to $198 million, representing 83% year-over-year growth. The company recently raised $1.6 billion through strategic financing, giving it what CEO Yuping Huang calls the strongest balance sheet among publicly traded quantum computing companies. However, investors need to understand the risk profile. IonQ is not yet profitable and burned through significant cash in 2025. The company trades at a premium valuation relative to current revenue. After hitting a 97% gain by mid-October 2025, the stock pulled back approximately 35%, closing 2025 up just 8% year-to-date as investors question the valuation at elevated levels. Growth catalysts: IonQ's 2026 catalyst list is impressive. The company secured a major deal with South Korea to install a 100-qubit quantum system, expanding its international footprint. It announced strategic partnerships in healthcare and logistics that could drive recurring revenue. And it's ahead of schedule on key technical milestones. It achieved #AQ64 3 months early, unlocking a computational space 36 quadrillion times larger than leading superconducting systems. Risk factors: this is a high-risk, high-reward play. IonQ faces competition from tech giants with nearly unlimited resources. Alphabet and Microsoft could potentially buy quantum systems from other manufacturers and integrate them into their cloud platforms, reducing IonQ's competitive advantage. The company's 1-year technical lead might not be sufficient to fend off competitors long-term. Plus, quantum computing revenue remains modest industry-wide, and profitability is still years away. Price targets: Zacks rates IonQ as a hold with projected earnings growth of 65.8% on 83.3% revenue growth for 2026. While specific analyst price targets vary, the consensus suggests IonQ remains speculative but could deliver significant returns if quantum adoption accelerates as expected. Many analysts view it as the top pure-play option for investors specifically targeting quantum computing exposure. Stock number 2. IBM, the enterprise quantum giant company overview. IBM isn't just a quantum computing company, it's a $283 billion diversified tech giant with deep enterprise relationships across the corporate world, trading around $302 as of early January 2026. IBM has been working on quantum computing for over a decade. The company recently introduced the Quantum Nighthawk processor, a 120-qubit system with enhanced connectivity that enables more complex computational circuits. Why now? IBM's quantum strategy targets demonstrating quantum advantage by the end of 2026, the point where quantum computers solve problems traditional computers cannot. The company has already generated over $1 billion in lifetime quantum revenue, making it the only quantum player with substantial commercial traction. Jefferies recently upgraded IBM to buy, citing strong software business and AI initiatives that provide stability while quantum matures. Financial metrics: IBM scale provides downside protection that pure plays lack. The company has a market cap of $282.7 billion and trades at a P/E ratio of 36. Full-year revenue expectations for 2026 show 4.9% growth, with earnings growth projected at 7.5%. The stock trades within its 52-week range of $214.50 to $324.90, currently near the upper end following recent analyst upgrades. IBM maintains a dividend yield of 2.28%, providing income while investors wait for quantum revenue to scale. The company's balance sheet is solid, with strategic acquisitions like the $11 billion Confluent deal strengthening its data infrastructure. Ray business. This diversification means IBM isn't dependent on quantum success to deliver returns. Growth catalysts: IBM's quantum platform delivers quantum computing via the cloud, making adoption easier for enterprises already using IBM infrastructure. The company's roadmap targets scaling future Nighthawk iterations to support higher gate counts, which should accelerate commercial applications. IBM's 95% penetration rate among Fortune 500 companies gives it a massive distribution advantage. These relationships could convert quantum interest into revenue faster than competitors. The company's hybrid approach, integrating quantum processors with classical high-performance computing, addresses a key limitation of pure quantum systems. This positioning could make IBM the preferred vendor for enterprises taking their first steps into quantum computing. Risk factors: IBM is viewed by some as a tech dinosaur that has been slow to adapt to industry changes. The company's revenue growth is modest compared to pure-play quantum stocks, while quantum represents long-term potential. It won't be a critical part of IBM's business in 2026. AI and consulting will drive most growth. Investors seeking explosive quantum-specific upside might find IBM too conservative. Price targets: analysts have a consensus price target around $295, with a high estimate of $375 and a low of $198. 9 analysts recommend buying while 4 suggest selling, resulting in an overall buy rating. RBC Capital recently raised its target from $300 to $350, reflecting growing confidence in IBM's diversified strategy and quantum progress. Stock number 3, NVIDIA. NVIDIA, the quantum AI powerhouse. Company overview: NVIDIA needs no introduction. It is the world's most valuable company with a market cap of $4.58 trillion, trading around $187 as of early January 2026. NVIDIA dominates GPU manufacturing and is the backbone of the AI revolution. While NVIDIA isn't building quantum computers, it's creating the critical infrastructure that connects quantum processors with traditional supercomputers. Why now? NVIDIA developed NVQLink, a high-speed bridge between quantum computers and AI supercomputers that creates hybrid systems essential for large-scale quantum computing and error correction. The company also launched CUDAQ, an open-source platform enabling quantum processors to integrate with GPU-based computing systems. Major research centers in Germany, Japan, and Poland are already using NVIDIA's quantum integration tools. This hybrid approach is genius. NVIDIA doesn't need to win the quantum hardware race. It positions itself as the essential middleware connecting quantum innovation to practical applications. Financial metrics: NVIDIA's financials are staggering. Analysts project 55% earnings growth on 43.2% revenue growth in 2026. The company has a $500 billion order backlog for its Blackwell and Rubin chips. Jefferies raised its price target from $220 to $240 based on sustained AI demand. Wall Street expects revenue to hit $320 billion in fiscal 2027. with some analysts suggesting Nvidia could exceed $350 billion. Nvidia trades at a P/E ratio of 46, which is elevated but justified by its growth trajectory. The stock gained 39% in 2025, and some analysts predict similar or stronger performance in 2026, potentially reaching the $240 to $260 range by month's end. Growth catalysts. Nvidia announced the Accelerated Quantum Research Center in Boston to collaborate with quantum partners. The company's next-generation Rubin chips are nearing release. And CEO Jensen Huang stated at CES that demand for Nvidia GPS is skyrocketing because AI models are increasing tenfold annually. This AI dominance funds NVIDIA's quantum research and ensures it remains relevant regardless of which quantum hardware company wins. The stock to buy now for quantum exposure doesn't have to be a pure quantum play. Nvidia offers the perfect blend of current AI profits funding future quantum innovation. Risk factors. Nvidia faces increasing competition from AMD, which won major data center orders from OpenAI and Oracle. Custom chips from Alphabet and other hyperscalers could reduce NVIDIA's 90% market share in AI accelerators. The stock's premium valuation leaves little room for disappointment. Any slowdown in AI spending or margin compression could trigger significant pullbacks. Nvidia recently lost $460 billion in market value from its October peak, though it's recovered somewhat. Price targets. Consensus estimates place Nvidia between $240 to $260 in the near term, with bullish scenarios reaching $280 $320 if AI infrastructure deployment accelerates faster than expected. The company's quantum exposure is a long-term option value on top of its core AI business. Bonus insight. Here is a portfolio allocation strategy for quantum computing exposure in 2026. Consider weighting toward established players with diversified revenue. IBM and Nvidia offer quantum upside with downside protection from their core businesses. IONC provides pure quantum exposure but should represent a smaller position due to higher risk. A potential allocation might be 40% Nvidia, 30% IBM, and 30% IONC, adjusted based on your risk tolerance. Remember, quantum computing funding more than doubled year over year in 2025. We are moving from research labs to commercial applications. These three stocks represent different risk-reward profiles in that transition. Remember, all investments carry risk. Past performance doesn't guarantee future results. Quantum computing remains an early-stage technology with significant volatility. This is educational content, not financial advice. I am not a financial advisor. Always consult with a licensed financial advisor before making investment decisions. Never invest money you can't afford to lose. Do your own research and understand both the opportunities and risks before investing in any stock to buy now. The quantum computing revolution is accelerating in 2026, and these three stocks, IONC, IBM, and Nvidia, represent the strongest plays across the risk spectrum. Whether you want pure quantum exposure or prefer established companies with quantum upside, these stocks deserve a spot on your watch list. If this analysis helped you understand which quantum computing stock to buy now, smash that like button. Which of these three stocks are you most bullish on for 2026? The pure play innovation of IONC, the enterprise muscle of IBM, or the AI quantum convergence of Nvidia? Drop your thoughts in the comments below. And if you want weekly stock analysis that could transform your portfolio, hit that subscribe button and turn on notifications. I'll see you in the next video where we analyze the best stocks to buy now across different sectors.